Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin today in Japan, where Sanae Takaichi was reappointed as prime minister following her electoral win in the recent snap election. This will allow Takaichi to focus on passing the annual budget and implementing a trade deal with President Trump. Here is Bloomberg's Brian Fowler.
So we heard from her last night, and we'll get her big policy speech tomorrow in which she'll lay out a lot of what her agenda is going to be. We expect her to talk about this idea of cutting the sales tax on food purchases for 2 years. She's already said that she wants to put that on a priority list. But she'll also talk about the deal that's been done. I think that gives her a lot of momentum going into her meeting with Trump next month. And the great thing about the deal from her perspective is that it touches on a lot of the priorities for Japan, from critical minerals to energy. So I think she'll tout that and give us some more information about that.
That is Bloomberg's Brian Fowler. The Japanese company Kirin is perhaps best known for its beer, and these days the company is being confronted with a long-term decline in alcohol consumption worldwide. Health concerns are just one factor. Many liquor companies are being forced to diversify, and Kirin is no exception. It's making a full-scale push into health sciences to help drive growth. And that's where we begin our conversation with Toru Yoshimura, Senior Executive Officer at Kirin. Toru spoke with Bloomberg TV host Shery and Avril Hong.
So tell us a little bit about how significant your division is to the rest of the Kirin Group.
Oh, okay, thank you. Kirin has expanded from its founding beer brewing business in 19th century, and then into the food domain, and then we entered to the pharmaceutical sector back in 1980s. And health science business is kind of another pillar which bridges between food and medicine, and which we are confident to nurture. The globally solving the people's health problem like immunity, anti-aging, and gut health. And sleep. And, we expanded our business based on the two key expertise. One is R&D based on the fermentation, the biotechnology, and also the marketing, with understanding, a deep understanding of the consumer needs.
So this seems like a very natural progression for Kirin at this point. You also purchased Fankel, a brand in China. Where are the bright spots around the world? Because even the Chinese market is such a tricky one, isn't it?
Yeah, it is. China involves a lot of, the uncertainties like regulatory and macroeconomic, and also geopolitical standpoint. And the China is one of the spots that we are really looking at as the kind of a potential market for us, leveraging the Fankel brand. And the Fankel is the Japanese leading the supplement and the cosmetic or skincare company, which we acquired in 2024. And that is a really key business unit for us to nurture our brand and also the health science brand. And in China, the Fankel brands are already there, along with our another business unit brand, Black Moss.
That's in Australia.
Yeah, that's right. They joined the Kirin Group in 2023. And that with the infrastructure, Brockmore and China, the Fankel in China, we are confident to expand this business.
So you're planning to expand in China. What about the United States? Because you now have this U.S.-Japan trade deal. The mood seems very favorable. Is that one market that you could target?
Well, actually, our primary target right now is Asia-Pacific, because we want to be one of the largest and most trusted health science companies in Asia-Pacific. Probably the first of our priority will be the Southeast Asia and China. However, because of the scale of the wellness market, the U.S. is really also very important for us, and but the U.S. has kind of higher barrier entry and fierce competition there. So we really need to establish ourselves as kind of a credit-based position in the U.S., probably with a science at its core.
How else are you expecting to perhaps establish that as you perhaps look to the U.S. as a key market, Toru-san?
Oh, as a U.S. market? Oh, other than U.S. market.
What are you looking at in terms of a science-based approach when you look at the U.S. as a place of opportunity? What some of the other metrics and approaches might be as you explore the U.S.?
I see. Thank you. And, as I mentioned, credit-based approach means that we leverage our expertise in R&D based on the fermentation of biotechnology. And I strongly believe that we can leverage our proprietary ingredients Kirin has been developing, something like we call it LC plasma, plasma lactic acid bacterium, and also acetylcholine and LC plasma is actually the ingredients which activates called the PDC, the command center of your whole immune system, and acetylcholine that works primarily in your cognitive or brain function, and we sell the acetylcholine in the U.S. already, they're produced by our biochemical business unit. So, with this kind of the scientific evidence will really help to deploy our expertise and also the nurture our business in this space.
You mentioned earlier also geopolitical tensions really not helping. When it comes to China, are you seeing any change in the business because of the U.S., because of the Japan-China tensions?
Well, for both Blackmore's and Franco's, it's too important, to nurture or expand our business in China. So, people places their value in the science and the product quality. So that's where we can leverage our expertise as Kirin.
Where do you produce? I'm sorry, because the yen is also very volatile, right? So do you have manufacturing facilities in China or here in Japan only?
All products are actually produced either in Japan or Australia. So we are doing mainly through e-commerce, including the cross-border e-commerce. So now this is the time for us to really consider to establish their domestic or local sales channels there, and also sometimes we need to consider their local production. However, because of the size at this moment, it's too early to think about it. So this kind of diplomatic tension is really the area we need to carefully watch, and I strongly hope this kind of diplomatic tension will be eased by the Takaichi administration, especially for the sound trade market environment.
Do you see that already happening with Takaichi administration now that she has a stronger mandate? How do you assess her sort of business support?
We are not sure yet. From the position of the government and probably just her new administration has started. So we'll see what's going to happen. But in the meantime, we really need to select our winnable area carefully for Kirin and also Black Mouse and the Funkos, then probably operate with the agility and the discipline.
Is the strategy M&As? Because it seems you purchased Fankle, Blackmore, so your expansion overseas, will that be inorganic through purchases?
Well, actually, we don't have any specific transaction I can discuss here in public, but because
there's some under consideration.
Yes, and because we acquired the Black Mouse of Funko, our primary focus is to grow organically to leverage this existing the business units. However, we really would like to explore the opportunity if it helps to grow or enhance the health science business from the view of the brands, route to market, and any capability we lack of. So, and also, to the point I mentioned earlier, we are looking at, we're focusing on the Asia Pacific. However, probably we would look at outside of Asia Pacific as well. The one example is the United States, because it is the biggest, wellness market in the world.
Given the high entry barrier that you mentioned earlier, an M&A would potentially make sense if they already had the channels established there.
It will be. But still, again, our primary focus is to grow organically. But in the meantime, we have long list, short list. So we'll keep looking at it.
What about Southeast Asia, because it's such an important market as well? Or is it for Kirin, I guess is my question, because you have big markets like China, you have Australia, but what about the smaller countries in Southeast Asia?
Well, Southeast Asia is really important for us because this area is really growing, almost a double digit. And one of the the world's fastest growing, probably the space for health-related spending over the next 10 to 20 years. However, the consumer needs really differ, among these markets. So we really need the market-specific approach.
How are they different? They are different from each other.
Regulations, and also we need to consider the religious part as well, and also in some countries for skin, some countries for the gut system, some country and has a needs for the anti-aging. Anti-aging is actually becoming more and more popular, and but number one is regulations. So but fortunately, Black Mouse are already there, so and we can leverage their capabilities in the regulation part as well.
That is Toru Yoshimura, Senior Executive Officer at Kirin, speaking with Bloomberg TV host Shery and Avril Hong. And we're bringing it to you here on the Daybreak Asia podcast. Welcome to the Daybreak Asia podcast. I'm Doug Krisner. It's difficult to avoid the debate over how AI may disrupt various business models. We know software shares have been a notable casualty. For a closer look, I'm joined by Tim Pagliara. He is the Chief Investment Officer at CapWealth. Tim is on the line from Nashville, Tennessee. Thank you for being here. So this phrase that's being used, shoot first, ask questions later. When it comes to these certain software names, is that basically what we've been seeing in recent days?
So I think it's just the uneasiness about what's it going to cost first, how are they going to get a return, and then how fast it's evolving. And I know even as an analyst, we are experiencing that. I mean, we're working with different tools, and it's amazing how quickly, like Claude 6 it is revolutionary. And we have this debate internally about how it's going to impact software. And so I think some of these software companies that have very, very expensive packages, they're going to be under some pricing pressure. They're going to have to bundle and innovate around it. So as of right now, it really looks to me like it will be impactful. primarily on pricing. I don't think people are going out of business, but I think they're going to have to innovate around it. And that's going to lead to a lot of job disruption, like people are predicting.
So there was some evidence today of dip buying in software names. The IGV ETF was up nearly 1.3%. When you take a step back and you look at various software companies, is it likely that this route that we've seen recently has been a bit too aggressive and we just have to maybe approach this with a little bit more sobriety when it comes to the longer term view on how AI will disrupt the industry?
Yes, and I think that's a real good point. If we could use Oracle for an example, Oracle has 78 data centers under construction. Their revenue is going to, expand exponentially. And after they did an earnings report last summer, the stock nearly doubled. I mean, almost overnight. And then it completely retraced that and went back because of the concern about how much money they were going to have to borrow. But I think what they missed was the unique application, for example, that Oracle is focusing on. And they're moving to Nashville. They're making a $4 billion investment into a campus. It's going to be their headquarters. Nashville is the headquarters for all innovation related to healthcare. And so I think Oracle is going to have a unique advantage with AI that they will be able to monetize around healthcare, lead to better outcomes, innovation, lowering healthcare costs, all of those things. So, I think Oracle's a little different than the rest. Now, if I was, for example, had a software company that was in engineering, architectural engineering, I think that is an area where AI is just going to completely, upend traditional ways of looking at things. So I think it's a case-by-case study. Oracle's different, Microsoft's different, Amazon's going to be different. So these big companies are going to have an edge. They'll get more profitable, more efficient, and will really do a lot of value added to the consumer and the public at large.
So maybe we can pivot and talk a little bit about the minutes from the last Fed meeting that were released on Wednesday. They indicate that officials are worried over inflation, and a number of Fed members suggested maybe the next move is to raise interest rates if inflation were to stay above the Fed's goal. Does that sound a little dramatic to you, or do you think there is a real concern here that we need to consider the possibility of higher interest rates?
You've got to put that in the context of Warsh's nomination. And Kevin Warsh is an academic. He's well respected. He was unanimously confirmed the last time he went to the Fed. And what Warsh is focused on is reducing the Fed's balance sheet. So the Fed's balance sheet got up to $8 trillion. They've cut it to $6 trillion. Now that is tightening. When they reduce their balance sheet, they're tightening, they're taking money out of circulation. So I believe Warsh looks at interest rates differently than the rest of the world. This idea, for example, that hedge funds owning homes and gobbling up, rental properties, they have a competitive advantage. They can deduct their interest expense. They can do a lot of things that regular homeowners can't. And so you've got this disconnect right now in the homeowners market where they're very sensitive to rates. And so you've seen home prices stall. Business is not as sensitive. Rates could be 1%, they could be 5%, they can be 12%. And if they can borrow the money, make an investment, and profit from that after the interest expense, they go ahead and do it. You can't change the dynamics of a homeowner that has to pay a 7% mortgage versus the cost of that versus a 4% mortgage. And so Warsh is going to force the hand of lowering rates at the same time that he's sensitive to inflation by reducing the Fed's balance sheet.
I'm wondering whether you think there is a risk that any balance sheet reduction could potentially put asset prices under pressure.
Oh, I think they are under pressure. And I think, part of what's happened with the Fed is, they compete with the private sector because they're borrowing the money, from the banks with the Fed funds rate. So they printed some of the money and they borrow it also. And so if you reduce the balance sheet, then you leave more money out in circulation for the banks to do their job. And one of the things that Scott Bessent at Treasury wants to do, and I heard him speak earlier this year in a private meeting, he wants to get more of, this opaque market in private credit. He wants it under the umbrella of regulation. He wants it brought back into the system. And so this is a major policy shift, and it's one that I support. I think it will be successful, longer term.
Let's talk a little bit about the macro, because we had a number of data points today on the American economy that basically indicate things are holding up pretty well. Industrial production up in the month of January by the most in nearly a year. We also had news that orders for business equipment rose in December by more than expected. And housing starts, to your point on the housing market, housing starts at a 5-month high. Given everything that I just laid out there, it's kind of tough to argue right now that we need lower interest rates.
Yes. Well, no, it is, because you still have, as we speak directly to housing, housing costs or the shortage of housing is still real. I mean, we're anywhere from 4 to 8 million units short in housing. And so this uptick today just kind of counterbalances the losses that we had and the stagnation that we had in housing starts, most of last year. So I do believe that it will not be inflationary, and it will. We'll see a lot with Trump's State of the Union address next week and how he's going to address all of this.
Tim, we'll leave it there. Thank you so very much. Tim Pagliara is the Chief Investment Officer at CapWealth, on the line from Nashville, Tennessee, joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.